spent 18 years building something from nothing at a company most people in the financial industry had never heard of, and that was fine with me. Meridian Financial Systems wasn't a flashy name. We didn't sponsor stadiums or run Super Bowl ads. We built the core infrastructure that kept mid-sized regional banks running. The back-end systems nobody saw but everybody depended on. Payroll processing, compliance reporting, real-time transaction monitoring, the kind of software that, if it went down on a Tuesday morning, meant 300,000 people couldn't access their accounts. I was the one who built most of it. Not alone, obviously. I had a good team, but I was the one who designed the architecture. I was the one who negotiated the compliance frameworks with our banking clients when the regulators changed the rules, which they did constantly. And I was the one who, 6 years earlier, had personally convinced First Coastal Bank to sign a $38 million contract when they were halfway out the door over a competitor's pitch. My CEO at the time, a quiet man named Alan, who wore the same brand of khaki pants every single day, shook my hand afterward and said, "I don't know how you pulled that off." I told him I'd just listened better than the other guys. That was mostly true. I was good at my job. I knew I was good at my job. I didn't need a plaque on the wall to confirm it. What I didn't see coming, and I still think about this sometimes, late at night when I should be sleeping, was the Tuesday in March when everything changed. Not slowly, all at once, the way things usually do when they finally do. I was in the middle of a call with our compliance lead at Heartland Community Bank. We'd been working through an issue with their transaction flagging system. False positives were triggering on legitimate payroll runs, and their operations manager was losing his mind over it. I had a fix. I was walking her through it, and I had 3 browser tabs open with the regulatory documentation to back up exactly why our approach was the right one. My CEO's assistant knocked on my office door and told me Alan wanted to see me. I held up one finger, finished the explanation, confirmed we had a path forward, and headed down the hall. Alan's office door was open. He was standing by the window, not sitting. That should have told me something. Sitting across from his desk was a younger man I'd seen once before at a company-wide meeting the previous fall, the kind of meeting where everyone smiles and nods and nothing of substance gets said. The young man's name was Garrett. He was 29 years old, had an MBA from a school I recognized, and was Alan's nephew. I didn't know that last part yet. Alan introduced him as the new Chief Strategy Officer. He said Meridian was entering an evolution phase. He said they needed fresh thinking at the leadership level. He said my role was going to be restructured to focus on technical execution, which meant I would now report to Garrett. I sat with that for a moment. 18 years. I'd been here when there were 11 employees and we shared a parking lot with a dry cleaner. I had been, functionally, the number 2 person in this company for the better part of a decade. I asked Alan when this had been decided. He said it had been in discussion for several months. I asked why I hadn't been part of that discussion. He said they wanted to finalize the structure before bringing it to the team. I nodded and said I understood, because in that moment I didn't trust myself to say anything else. Garrett moved fast. I'll give him that. Within his first 2 weeks, he had already scheduled one-on-ones with every major client I managed. He sent emails introducing himself as the new strategic lead on their accounts, with me CC'd, not looped in separately. CC'd, like an afterthought. Like I was the assistant being kept informed. I started getting calls from clients asking, quietly, what was going on. Margaret, the VP of Operations at First Coastal, the same bank I'd brought in 6 years earlier, called me directly and said, "I got an email from someone named Garrett. Should I know who that is?" I told her he was new to the leadership team. She paused and said, "Okay." That one word carried a lot. The thing about working in banking compliance software is that the relationships are everything. These aren't consumer apps where you can update the user interface and win people back. These are institutions that process billions of dollars in transactions. They have regulatory obligations. They have auditors. When they trust you, that trust is built over years of not screwing up. When you introduce a stranger and ask them to just hand that trust over, You're asking for something that doesn't work that way. Garrett didn't understand that. I don't think Alan did either by that point. What made it worse was what happened in the internal meetings. Garrett would ask me to prepare briefings, detailed ones, with the technical background, the client history, the compliance framework, and then he'd present them to Alan as if he'd developed them himself. He'd rephrase things, use different words, but the structure was mine. The data was mine. The analysis was mine. The first time it happened, I thought maybe I'd misread the situation. The second time, I started keeping records. The third time, I sent him a draft at 11 p.m. on a Sunday and watched him present it verbatim at 9 a.m. Monday morning without a single acknowledgement of where it came from. I knew exactly what was happening. I went to Alan. I laid it out as professionally as I could. I showed him the emails, the timestamps, the original drafts. Alan listened. He nodded. He said he appreciated me bringing it to his attention and that he would have a conversation with Garrett about collaboration and attribution. Then he looked at me with this expression I'd never seen from him before, a little tired, a little uncomfortable, and he said, "You know, no one here is irreplaceable, Nolan. The company has to keep moving forward." I said, "I understand." I didn't mean it the way he thought I did. I drove home that evening and sat in my driveway for probably 20 minutes before going inside. My wife came out and knocked on the window. She could tell something was wrong. She's been able to read me like that for 22 years. I came inside and sat at the kitchen table and told her everything. She listened without interrupting, which is one of the things I've always loved about her. When I finished, she put her coffee mug down and said, "So what do you want to do?" I told her I wasn't sure yet. She said, "Yes, you are." She was right. I had coffee the next morning with a former colleague named Dustin who had left Meridian 3 years earlier to join one of our competitors, a company called Vantage Core Systems. They operated in the same space we did, same client profile, same regulatory environment. I'd stayed in touch with Dustin because I liked him and because the industry was small enough that you kept your relationships warm. He'd reached out twice in the past year to feel out whether I'd be interested in a conversation. I'd said no both times. I called him the night before and said I was ready to have that conversation now. We met at a diner near his office. He ordered eggs. I ordered coffee and didn't touch it. He told me what Vantage could offer. It was more than I was making at Meridian, significantly more. More importantly, the role was VP of Client Architecture, which meant I'd have ownership over the client relationships and the technical strategy, not just one or the other. He said they'd been building toward that offer for 2 years, waiting to see if the right moment came. I told him I needed a week to think. I didn't need a week. I spent 3 days getting my paperwork in order and talking to an employment attorney to make sure I understood my obligations around non-solicitation and intellectual property. The attorney told me what I could and couldn't do. She was very clear. I was very careful. I submitted my resignation on a Thursday afternoon. Alan called me within an hour. He sounded like a different person than the one who'd told me nobody was irreplaceable. He asked if this was about Garrett. I said it was about a lot of things that had been building for some time. He asked if there was anything he could do to change my mind. I told him as kindly as I could that the decision was final. He went quiet for a moment and then said he was sorry it had come to this. I said I was too. That part was true. What happened next, I want to be careful about how I describe, because I didn't engineer it. I want to be honest about that. I didn't make calls I wasn't supposed to make. I didn't reach out to clients to poach them. I followed every term of my departure agreement to the letter. What happened was a result of 18 years of work, not anything I did in the 2 weeks after I resigned. The first call came from Margaret at First Coastal, 4 days after my last day. She wasn't calling to wish me well, though she did that. She was calling to ask whether I could tell her, professionally, what the transition at Meridian looked like from the inside. She said Garrett had sent her a proposal to renegotiate their service terms, tighter SLAs, higher pricing, a new data governance structure. and that she wasn't comfortable signing anything until she understood who was going to be responsible for implementation. I told her very carefully that I couldn't advise her on Meridian's internal operations. I told her I was now at Vantage Core. I gave her Dustin's contact information and said that if Vantage could serve First Coastal better, I'd obviously be happy to work with her there. She said she'd be in touch. 3 days later, she called Dustin. Within 6 weeks of my last day at Meridian, 4 of our top 8 clients had initiated conversations with Vantage. I'm not going to claim I know exactly how many of those conversations resulted from my presence at the company, because that would be dishonest. What I know is what Dustin told me, that in his 15 years in the industry, he had never seen an account transfer pattern move that fast. The numbers I found out later, through someone who still worked at Meridian and who I hadn't spoken to in years but who reached out to me, were these. Approximately $42 million in annual contract value had either walked out the door or was actively in conversation with competitors in about 7 weeks. Alan called me again in early May. This time he didn't sound composed. He asked first whether I was soliciting his clients. I told him my attorney had reviewed every communication I'd had with any former Meridian client and that I was confident everything had been handled correctly. He paused and then said, "Nolan, I need to be straight with you. We are in serious trouble. The board is asking questions I can't answer." I said I was sorry to hear that. He said Garrett had tried to restructure the First Coastal contract without fully understanding the compliance requirements. Specifically, the new data governance structure he'd proposed conflicted with provisions under the Graham-Leach-Bliley Act that our original implementation had been carefully designed around. Margaret's legal team had flagged it. First Coastal had put the contract on hold pending a full compliance review. I knew what that meant. I'd worked in this space for 18 years. A compliance hold on a banking software contract doesn't resolve in a weekend. It means auditors, attorneys, regulators looking over shoulders. It means months. Alan asked if I would be willing to consult, come back in, not as an employee, just as a consultant, help Garrett understand the framework and get the client stabilized. I thought about that for a long moment. I told him I would have to discuss it with my current employer and that if they were agreeable, I would consult at a rate that reflected the urgency and complexity of the situation. I told him my attorney would draw up the agreement. He said whatever the number was, just send it. I want to be honest about something. Part of me, when I got off that call, felt something that I don't think is a very noble feeling. It wasn't quite satisfaction. It was more like the strange relief you feel when you realize that reality has been paying attention all along, even when it seemed like it wasn't. 18 years of doing the right thing, building the right systems, maintaining the right relationships. And a 29-year-old with good hair and an MBA had walked into the building, and a week later I was being CC'd on my own client accounts. And then, in 7 weeks, $42 million worth of trust walked out the door with me without me even asking it to. I don't say that with pride. I say it as an observation. Trust is not a line item on a balance sheet. You can't transfer it in an org chart update. You earn it over years of small, boring, consistent reliability, and when the person who provided that reliability leaves, it leaves with them. No one explains this in business school. I did the consulting engagement, 4 weeks, 3 days a week, at a rate that I will not specify, but that was considerably higher than my annual salary divided by 52. I helped Garrett understand the compliance framework. I watched him take notes in a leather notebook, nodding seriously, saying things like, "That makes total sense," about information I had tried to share with him in briefings for the previous 7 months. I was professionally courteous. I did not say anything unkind. I fixed the First Coastal situation, and I stabilized 2 of the other client relationships, enough that they didn't fully walk. On my last day of the consulting engagement, Garrett walked me to the elevator. He was quieter than usual. Before the doors opened, he said, "I want you to know I respect what you did here, both times." I said I appreciated that. He said, "I think I came in thinking I understood this industry better than I did." I said, "It happens." And I meant it without any edge. It does happen. The problem wasn't that he was young or that he had an MBA. The problem was that he'd been put in a position that required 18 years of earned relationships and given no framework for understanding what that actually meant. The elevator came. I said goodbye. I meant that too. Vantage closed the first coastal deal 3 months later. Full migration. 5-year contract. Margaret sent me a handwritten note which almost nobody does anymore, and I still have it. 2 of the other Meridian accounts came over within the following year through entirely legitimate competitive processes. RFPs, evaluations, the whole thing. We won them on merit. Alan reached out one more time around 18 months after I left to let me know that Meridian had been acquired. A larger company had bought them at what he diplomatically described as a valuation that reflected the challenges of the past year. He didn't mention Garrett. I didn't ask. I thanked him for letting me know and wished him well. I meant that too, actually. Alan was not a bad man. He made a bad decision, and he didn't see the consequences of it clearly enough until they were already happening. That's a human failing, not a villainous one. What I think about most now, when I think about that whole chapter, is not the $42 million or the consulting rate or any of that. I think about that phone call with my wife in the kitchen when she put her coffee down and said, "So, what do you want to do?" I think about how I knew the answer. I'd known it for months before I was willing to say it. Sometimes the most important thing you can do is stop waiting for someone else to recognize what you already know about yourself. The people who told me I was irreplaceable were right, as it turned out. They just said it with the wrong tone at the wrong moment to the wrong person. I'm not telling this story to say I won anything. I'm telling it because I spent a long time being the person who showed up early and stayed late and kept my head down and trusted that doing good work was its own argument. And it was. It just wasn't the argument I thought it was. The argument wasn't with Alan. It was never with Garrett. It was with myself, about whether I believed that what I'd built had value independent of whether the person sitting in the corner office understood it. 18 years of work said yes. $42 million agreed. I've thought a lot about what actually happened in that story. Not the numbers. The numbers are just what's left when the dust settles. I mean what caused it, because nothing in that whole sequence of events was random. Alan made a choice. He brought in someone who hadn't earned the room and gave him authority over someone who had. That's not inherently wrong. Organizations restructure. Leadership evolves. New blood can be good. The problem wasn't the decision itself. The problem was what drove it. It wasn't strategy. It was comfort. Garrett was family. And when we let comfort make decisions that require clarity, we don't get to be surprised by what follows. That's the part I keep coming back to. Not Garrett's ambition. That was honest, at least. He wanted to move fast and prove himself. I understand that impulse, even if I disagree with how he went about it. What cost Meridian $42 million wasn't a young guy who didn't know enough yet. It was a leader who stopped paying attention to what was actually holding his company together. Alan had built something real. He just forgot, somewhere along the way, to keep looking at it clearly. And me. I'm not outside this. I stayed 2 years longer than I should have, telling myself that doing the work well was enough of an argument. That was a failure of honesty on my part, not moral failure, just the kind of quiet dishonesty we practice when we're afraid to name what we already know. I knew the situation was deteriorating. I knew what Garrett was doing with my briefings. I knew that the conversation with Alan hadn't actually resolved anything. I kept showing up anyway, kept doing the work, kept believing that the quality of what I produced would eventually speak for itself in the room. It did. Just not the room I expected, and not at the time I planned. That's the thing about integrity in your work. It doesn't always pay off on your schedule. It accumulates quietly the way trust does, and it tends to surface all at once when the pressure changes. Margaret didn't call Vantage because I asked her to. She called because 18 years of reliable, consistent, honest work had built something between us that wasn't transferable by email introduction. That relationship was the result of thousands of small moments where I did what I said I would do, explained what I didn't know, and showed up when it would have been easier not to. You can't fake that. Garrett found that out. Alan found that out at $42 million worth of finding out. What I want to say to anyone who recognizes something of themselves in this, maybe you're the person doing the work while someone else is getting the credit. Maybe you're the person who's been told, directly or indirectly, that you're more replaceable than you know yourself to be. Is this the work doesn't lie? It accumulates. What you've actually built is more durable than whatever narrative someone else is constructing about you in the corner office. The hard part is trusting that long enough to make the move when it's time, not staying out of fear, not leaving out of anger. Moving when you've thought it through clearly and you know, really know, the way my wife knew before I admitted it, that it's time. That clarity is its own kind of intelligence. It's not something you learn in school. You earn it by paying attention to your own life honestly, over a long period of time, without flinching at what you see. I earned mine over 18 years. I'm still glad I did.